All right, good morning, everyone. Happy Saturday. Hope you all are doing well. Let's take a look and see what Bitcoin is doing. So, going into the daily, I know I mentioned that you could potentially put a long right here, ride this up. You would have been able to take part of this move. I mean, you'd have to, in order to get even a couple $100 out of this, you would have had to at least been at like a point 0.7, point 0.8 Bitcoin or higher. It would have been a very risky move, honestly, in my opinion. And even now, you'd have to have taken profits early. So we're seeing some resistance here at 60,622 that we've had up for a while. So definitely would have been a very high risk trade. I personally did not take that. I am waiting to get in once we hit our bottom somewhere down here, hopefully. So just kind of keep that in mind that that could have played out for you. You just would have had to take profits early, which is kind of the normal occurrence when you're going long in this cycle currently. Going into the 12-hour, you can see that we are getting rejected off of this 60,973 level. So I believe, was that a pull from here? I want to say right around here, around 60,944. So this would have been a pull from this wick right here down to the bottom of the channel right here. So right about there. That puts you at about that 60,973 level, which is kind of, we didn't even really get to it fully before we started getting rejected. We don't necessarily have to have a full-blown pullback. It does look like we're gonna pull back somewhat right now. I did take a brief look at liquidity this morning, and it does look like we're starting to get a bridge down. So this could potentially be our high for even this weekend. Um, but again, guys, like, I can't stress this enough. If we cannot on the daily, or sorry, on the weekly, um, get back up above the 62, 425 area, um, then we're going to have a world of pain probably starting, the beginning of next week, hopefully. That would at least allow for us to maybe have a bullish week if we were to get some bearish, activity Sunday evening, Monday, Tuesday. But that's what I'm seeing so far. I mean, there's a very, very slim chance now at this point that we're going to get above the 62,425 area. Um, so just keep that in mind. And I think that even if we look at the CME chart, um, let's see, where are we at here on the weekly? Yeah, I mean, we lost it. We lost it by quite a bit already on Friday. So as far as our CME chart goes, we have fully lost the 200 MA on the weekly. So just kind of take that with a grain of salt. I don't think that there's going to be a lot of activity the rest of Saturday. I think that we got our pump for the day. It was a decent expansion. You went from, let's see, midnight Saturday. So you went from 60,098 all the way up to 60,921. So almost $1,000 move. Nothing spectacular though. I mean, it is the weekend. We're still dealing in a low volume time where kids are out of school and people are away from their desks. So not a huge move, but we did get some sort of move today. Let's go ahead and check the 1 hour. So you're kind of your last hope before looking at liquidity with you guys. Your last hope right here is going to be pulling from this wick to this wick, and just saying that you kind of have to bounce off of 59 area. I know there was a spot at 52. We're going to drag this down though. I'm going to drag this line down. We're going to target 59, and if you cannot get a bounce off of 59K, and obviously get a bounce from 58,613 that we've bounced off of about 3 times, your next shot is going to be down here. And I have a limit order around 57.5. I did remove my 59.2 limit order, and I'll show you why that I did that. But so far for right now, I just have a limit order down at 57.5, which is front running this 57.3 area. So anyways, that is what I'm seeing so far. So your line in the sand for today is 59,000 even, as well as, you could potentially bounce off of 58,613 again. Um, but it just is not looking great, right? You lost the 60,622 that I've been talking about. You didn't even get up to reclaim the 60,973. I believe we got rejected off of the 30-minute 200. Yeah, so we weren't able to get back above the 30-minute 200, at least for now, is what it's showing. So unless this flips around and, we start moving back upwards, we reclaim 60,622, and we get that golden cross on the 30, you got to expect for us to just start losing 200 MAs on the smaller time frames and for us to go lower. Okay. Um, that's why I'm seeing in the charts before looking at liquidity. Let's go ahead and look at liquidity and our order book. So going into the 4 hour for liquidity here. All right, let's take a look. So taking a look here, um, you can see that we barely kind of front ran this upper liquidity area, unfortunately. So this would have been our best case scenario, reclaiming this and starting to somewhat take out the 25x. And then obviously, I mean, there's not even any 10x really. My goodness. So you'd have to say 25x, and then you'd have to probably zoom in on liquidity here, to possibly get up higher. But again, I'm zooming in on this aggregation. So, we basically front ran getting into here. We got to expect we're going to probably go down into here. If not, at least consolidate around that 59,000 area if we're going to stay somewhat bullish for the time being. But on the 4 hour, it's just not looking great. 1 hour, let's take a look. All right, so the 1 hour, I got my aggregation. Let me turn this down to 1 real quick here. So yeah, I mean, you took out the green liquidity that you had on the 100x, at least in the short term on the 1 hour. It looks like you have some around 60,000 for at least 100x. Doesn't look like you really have any on the 50x to the downside unless I zoom in. So that's a decent sign. But again, zooming in shows all of this, right, to bridge down. And then 25x also shows, down to that 57 level. So I'm targeting this pull down here. It's in confluence with the 4 hour as well. Again, we can, keep an open mind. I mean, we can bounce from any time, right? We can start taking this out. It's just not looking likely, especially since it's a weekend, okay? If we do start diving into here, I am somewhat expecting a drop to that 59 area, and then we bounce from there and start taking this out. So let's move this down to 59, and then we'll compare it on the smaller time frames here. I'm going to move it closer to 59 here. So I would expect if we're going to take this out up here, again, we have to keep this level at 59,000, bounce off of it, and come back up and start taking this liquidity out. That is our only last hope, basically, to end this week, potentially above the 200 moving average on the weekly. And again, this is for the futures, charts, the futures contracts. Already on the CME, we've lost it, right? So this is our last chance for the futures. The 15-minute, we do have enough liquidity to get us back up. Whether or not we take it, that's going to be a bigger question, right? So you can see, I mean, there is liquidity to 59K and even further to the downside, but to me the only unfortunate thing about this is this looks like a bridge now. You have a bridge at 58.8 to get us down to 58.5 to start taking all of this out down to 57. So it's just not looking great, okay? And that's part of the reason why I pulled my 59.2 order, was because this started forming, and I know that when this forms, this is a bridge. The only time I would potentially take that is if this was yellow or red, okay, to 59.2. If it's blue, it's basically going to be treated as a bridge, usually. Not sometimes it's rare where we will get a bounce, like in this situation here, but a lot of times this will be treated as a bridge to the downside to a bigger pool of liquidity, okay? And we are going to take a look at the simple map this morning. I know I haven't done it the past 1 or 2 times, so we will take a look at that real quick. Let's finally drop down into the 5-minute before looking at our order book here. But dropping down into the 5-minute, you can see, I mean, we took out some of that red liquidity, and so, it makes sense that we would, flip and reverse after that point. Watch for this 5-minute to lose the 200 MA. We're bouncing off of it, which is a decent sign for right now. But I am going to be looking for, that to be lost. One level to keep in mind, guys, is 61 124 was the next level up. So if we are going to stay bullish, we reclaim that, and then once we reclaim that, using it as support, then we can start moving up into the 62 area and seeing if we can get back above that weekly, 200 MA. But until then, like any other pump, we have to assume bearish because of the cycle that we're in, and we have to assume that we're going to go lower, okay, with small bounces here and there. Um, Another area of confluence that we have, at least when it comes to our orders and to where we might be going, is if you look at our order book through Kiyotaka, which is my free order book program, um, you can see that we have those orders down to 59,000. So that aligns with this idea of a potential bounce, but they're just not strong orders. They can easily be taken, flushed down further. This is 58.5, so 58.5 aligns with the top of this pool right here, and then you can just see these orders just go and trigger down. Even look at this huge one, 900 and what is this now? 915 Bitcoin order at 57.5, and that's my entry. I'm one of those people that are willing to buy a long futures contract at 57.5 because that looks like it's the most likely, right? Um, and I do have my stop loss protected in the 56 area. I have a deeper stop loss, but this makes sense to me that we can easily get down here, right? If we do not bounce now, we don't start reclaiming 61,124, we don't start reclaiming 62,000, that just looks likely to me. Okay, so this order book aligns with my thesis on, how I'm reading the liquidity map, which also aligns with my 786 levels. Okay, so you got three areas of confluence with that. Going in now finally to our simple map. So we will take a look at our simple heat map here, or simple liquidity map, I should say. Um, so this is the graph version of what we were looking at on the chart. But you can see that, to the downside, we have a lot more 100x, we have a lot more 50x. It alludes to the fact that, there's a lot of people trying to go long here thinking that we're going to start reclaiming some of these areas. Yes, there is more 10x, 25x, even 50x up above. However, um, is there enough to drive us up there on a low volatility weekend? That is the question. We have some 100x right above us of people going short, not a lot of a bridge there. You have less than 0.2 million, so about 200,000, less than 200,000 in orders. But to the downside, you start getting into the millions. So it just really kind of, in the smaller time frames, it shows that we're going to go to the downside before we go to the upside. There's more liquidity closer by, 5, 15, 1 hour candles, okay? Looking at our swing trading. So the swing trades, the 4 hour and the daily, right? Um, you have a lot more, if I were to zoom in more, you can even visually see it. You have a lot more to the downside, right? This is where we currently are. Obviously in the short term, you don't have as much, but then you start getting into here, you start getting into the multi-hundred millions of dollars of liquidity. So, there is a lot more liquidity to the downside, right, than there is to the upside. You only have, even getting above, let's see, taking us to 62,000, you got, in the smaller millions, 5 million, 8 million, 10 million, 12 million, you don't start getting into even the 50 millions until, you get into the 67.5 area. So we need a lot more short liquidity on the bigger time frames to get us up higher. Right now, there's just not enough, and it just shows here. So the higher probability play is that sooner or later we are going to fall this way and take this out. And then, like I said, as we take this out, you're going to induce more retail to go short, which is going to build up the upside liquidity to allow us to go long and take more of this out. So, as we fall into the 50s again, the 59, 58, 57,000, that should invoke more longs, or sorry, so more shorts, 60, 61,000, 62,000 range because people are chasing, right? It just makes sense. That's how the marketplace is. And so as far as liquidity goes, no matter what we look at, whether it be the regular heat map, whether it be the simple map, whether it be our order books, it just paints the picture so far that we will be going to the downside sooner rather than later. So anyways, guys, that is what I'm seeing for the day. I hope you guys enjoyed this update. If you guys want to use these tools, and we have that new TrendIf tool. I'm still practicing with it, still utilizing it. Highly recommend getting Trading Different. Feel free to use my code Sean to get 10% off of your order. tradingdifferent.com/code/Sean. Again, to get 10% off of this entire tool set through Trading Different. With that being said, guys, I will be back tomorrow. I will be keeping you guys updated either on X or within the Sin City Crypto group. But I hope you guys have a wonderful day, and I will talk to you tomorrow. Take care.